All right, can y'all hear me? Can y'all hear me? Mic check, mic check. Mic check. Press 1 if you can hear me. Okay, appreciate it, appreciate it. So I got to start this over, man. I appreciate y'all joining. Hopefully y'all had a good day today. Happy Mother's Day to the mothers. If you got your mother in your life, happy Mother's Day. Much love, much love. What's up, Dorelli? What's up, Ed? What's up, Mark? What's up, Shep? Jay Manson, AWB. What's up? Appreciate y'all joining on this Mother's Day, Sunday, May the 10th. We are starting a new week in the markets. And today I just feel like starting fresh because when I say start fresh, I'm going to be more technical today because I got to recalibrate where I am in the marketplace as a trader, right? When I say that, what I mean by that is we're running to new all-time highs for the markets that I primarily watch and trade. And here we go, you know, we get some activity in the crypto market. We're going to get into it. So this one is going to be more technical. So hopefully you will enjoy this, right? Hopefully you learn something. Everything I'm going to talk about, you can pick up and apply. So that's pretty much what I'm going to do. I'm going to be technical. Give it a few minutes. I am live on YouTube and I'm live on X at the same time. Let me come over to X right quick. Let me see. If you're on X, right, please repost the live stream so people can see it. Tag people, etc. The markets have just opened up. Let me see what time it's about 2 hours ago. So the markets are live. I haven't even looked at the charts yet. Well, I got them pulled up, but I haven't like rolled my sleeves up since they opened. So I don't know if we gapped down, gapped up. I don't know. I'm about to check it out though. As far as headlines, you know, we got the clarity news, but I kind of want to just get into the TA first because I'm kind of excited about the market, as everybody should. Every week, you know, there's some excitement, but I'm going to get into the TA side today. Make sure y'all hit that like button, subscribe. If y'all want to get in the Patreon, the Patreon too. But if you want to get in the Discord, I posted the link in the chat on YouTube. So if you want to get in the Discord, the link is in the chat on YouTube. It's starting to pick up a little bit. I really enjoy the community. Everybody is genuine for the most part. AWB. NQ gap down, took out previous month's low. Do you say previous PM? I'm gonna assume that's previous months, but went up and took out previous month's high. So we're gonna look at it, AWB. We're gonna look at it. I'm gonna take a look at it. Appreciate you joining. Let me check X right quick before I get started. X is a little weird. The algorithm is like bots, so I'm just trying to get a feel for what's going on X. Let me see. You say PM? Oh, the PM. Okay, I'm thinking previous months. The PM low. The PM. Okay, I got you. But we talking about the PM from Friday, I assume. Let me get X together right quick before I get started. Make sure y'all get your pen and paper, right? Pull out some instruments. TZ32, crypto looking like a classic pullback to 50% retracement to now displaced to all-time highs, boss. Appreciate it, TZ. We're gonna take a look at it, TZ32. We got 2 TZs in the community, so Somebody got to switch something up. I'm gonna let y'all figure it out. Somebody got to switch that up. But nah, TZ32. 1 second. Let me send a chat to X. And if y'all are on X, please repost it, share the live stream. Let me see right quick. I think I gotta normally how I do it, I respond to people. But I really don't have time at the moment to do so. So let me see right quick. Maybe people, let me see. I'm gonna get started here in a moment. 1 second. One second, y'all. 1 second. I'm trying to send a post on X. If you're just joining, I definitely appreciate your patience. We're going to get into the markets here 1 second. Because I'm streaming on both platforms. I'm on YouTube and X. So let me see. All right. So let's come over here. What's the first thing I want to look at, right? It's the first thing I like to look at. I want to come over here. First thing I'm going to look at the 10-year treasury. I'm going to come look at the treasury market, right? This is the first thing I'm going to get into. So if y'all just joining, y'all don't want to get dive into these markets, y'all don't want to learn how to profit from this, learning these concepts, then this might not be for you, right? This is more for the people that want to pick up this skill set and take advantage of price action in the current conditions. So on the right side of my chart, I'm looking at the debt market. Right here on the left, I got the dollar index pulled up. You got to start with the debt market because the debt market is the backbone of the economy. The debt market is the economy, pretty much. The entire financial system is built around debt, and that's where you should start your analysis using the debt market. So on the right side, I'm looking at the 10-year bond at the top and the 10-year yield at the bottom. They are inversely correlated. So if the 10-year bond sells off, right, you're going to see the yields push higher. If the 10-year bond goes higher, you're going to see the yields go lower. The yield is the interest rate, and the interest rate is tagged pretty much. It is synced with the dollar, right? So whatever the yield does, the dollar does. So if the bond goes lower, the dollar goes higher, right? If the bond goes higher, the dollar goes lower. So this is the debt system. I'll explain that a little bit more here shortly, but I like to come over here first on the right side and watch the debt market. I don't do intraday analysis on the debt market, and I don't do intraday analysis. So if y'all see me pulling up the debt market, I'm using long-term analysis. I'm using high time frame analysis. So when I look at the debt, the yields or the bonds, I don't go below the daily. The only reason you go below the daily on the daily time frame is if you're trying to trade the market. But that's not what I'm doing. So I'm looking at the top, for example, I'm going to use the 10-year bond, right? 10-year bond. I'm going to start on the monthly time frame, right? Let's start fresh right quick. I'm going to do this very quick. So what I'm doing is I'm trying to find a 120-day range. If you watch my last live streams, y'all should be picking that up, right? You should be picking that up. So what I'm going to do is I'm going to drop a vertical trend line, go to the monthly. Everything I'm saying, you can do step by step, right? You can do this for yourself and it will unlock some things. I'm not going to go into so much detail, but the things that I'm showing you, you can apply it. You can pick this information up and start using it for yourself. Stop being lazy, right? Stop being lazy. So I'm going to drop a vertical trend line on the previous month's candle, right? Step one, right? Giving it up for free. Previous month's candle, right? And then I'm going to use an indicator right? I'm gonna use this indicator to hurry, kind of speed through the process a little bit. Let me see. Right here. All right. So after you drop a vertical trend line on the previous month's candle, then you're gonna drop down to the daily, right? Drop down to the daily time frame. Zoom out. Cut this down a little bit. Zoom out. So this indicator that I have on my chart, it allows me to see 20, 40, 60 trading days, or it allows me to see roughly 120-day perspective, right? And it allows me to do this quickly, because if not, I have to count candle by candle, which for time's sake, I'm not doing that currently. So I'm looking back. When I drop that vertical trend line, I'm looking to the left 60 candles or 60 days, right? And then I'm gonna clone that vertical trend line. I'm gonna look back 40 days, right? And then when I'm gonna clone this again, I'm gonna look back 20 days. Make sure y'all hit that like button, subscribe. This is for the people, we about to start turning up, especially if we do using the prop challenges, right? If we're using the prop challenges, it's time to sharpen up so we can pass those challenges. AWB, what's the name of the indicator? AWB, I get with you about that in the Discord. I'm gonna do that in the Discord. There's a reason for that. After I look back 60, 40, 20 trading days, then I'm going to look to the right of the vertical trend line, 20, 40, right? 20, 40, and 60 trading days to the right of the vertical trend line. That's what I'm doing, essentially. This is what I'm doing. So I'm looking at the 10-year, bond, right? 10-year bond. All I'm trying to do is kind of see what has it done in the past 120 days. That's all I'm trying to do. So after I'm able to draw that out, I then remove the indicator. Now this is what I'm looking at. Let me clear it up a little bit. So remember the vertical trend line. Now I'm on the daily. I've started the process on the monthly. I laid the vertical trend line on the previous month's candle. Then I go from the monthly down to the daily, right? I'm skipping the time frame. It normally goes monthly, weekly, but I'm skipping the weekly, going straight to the daily, because now I'm looking at individual daily candles. Each one of these candles roughly lasts 24 hours, right? 24-hour candles daily. It's 24 hours in a day. So there's 24 hourly candles. So starting on the daily, y'all in the chat, let me get some engagement. So if I'm on the daily, right? If I'm on the daily time frame and I'm viewing the market, this is how I'm viewing the market. I'm viewing the market with this much perspective, right? What do I mean by perspective? This is my canvas. And this is how much landscape I have on my chart, right? This is how much perspective I'm looking at the market with. Why am I looking at all of this over here? No, it's not right now at the moment. In situations, yeah, you look outside of this window, but for now, I'm looking in this 120-day window, right? Hopefully you learning something, because I just feel like giving today, right? I feel because it's Mother's Day and I'm in a good spirit. So I kind of feel like, handing things out, right? So this is all I'm looking at right here when I'm looking at the 10-year bond. This is all I'm looking at. Now I got levels below or to the left of that I'm interested in, but right now, this is all I'm looking at right now, this much perspective. So y'all in the chat, with this much perspective on your chart, what kind of trader do you think you would be just sitting here on the daily time frame? What kind of trader are you? I'm testing your education. And we are following the money. So whenever I do this process, to follow the money process, you start on the 10-year bond. Shep, you say sell model, scalper. Damn, ain't nobody over here on X. I guess I'm about to kill it on X. AWB daily to scalper today. So okay. Now we gotta do some education time, right? Education time. So if you're on the daily time frame, right? And this is for y'all that are learning. If you're on the daily time frame, it takes 24 hours in a day Let's say you don't go in this, let's say you don't go below the daily. You just the daily you're capped out. And you were to place a entry onto this, I'm thinking from a trader perspective, but if you was taking a trade right here on this time frame on the daily, right? You taking a trade on the daily, is that, and when I say taking a trade, like you got to also have objectives as well. Like you got to have targets. So if you was to take a trade on this on the daily and hold it, how long do you think? Okay, for example, right? Let's do this. Let's do this. Zoom in a little bit. This is the 10-year treasury, by the way. Let's highlight this low right here, this sell side liquidity. Below this low, there are pending orders in the market. So we're going to use that as a target, right? Smart money concepts. We're going to use that as a target, that sell side liquidity right there, right? So if I was just to buy this right now, short this right now, how long would it take to get here? Y'all answer that to me for me in the chat. If I was to short this right here, right, on Monday, how long will it take to get right here? And then based on how long it would take, now we don't know how long it would take, but that right there is a giveaway. If we don't know how long it's going to take, what kind of trading is that? What kind of trader are you? What kind of trader are you? EOKS1. Okay, we got some answers. EOK. Swing, Ed, swing, Shep. AWB scalper. Come on, AWB, swing. So it's not, I get AWB, I know what you're saying, what you would do, but no, like, and listen to what I'm saying. If you were not to drop below the daily, if you only can stop right here on the daily time frame and you was to short the market currently where it's at to this low right here, do you think that's scalping? Right? And everybody else, it could be a swing. It could be a swing, right? It could be a swing. It could be a short-term trade, right? Short-term trading is when you get in a position and you hold it for a few days at a time. So you already can see right here. Let me zoom in and put this in perspective for y'all, right? Let's put this on the daily time frame. Let's put this in perspective. This candle right here, the current candle, if I measure this to the left, right, that right there has already been 8 days. That's been 8 days. So do you mean if you was to short this market right here and you couldn't go to any other time frame, this is 8 days of consolidation right here, right? And this is not considered a scalp on the daily time frame, right? You will enter this position and be holding it. Imagine holding this for a week, more than a week. So if you was to get in a position right here, you will be holding it for probably a swing trade that could possibly take a few weeks, or a day trade. A short-term trade, which could take a few days to a week, right? Because this can go at any moment, just low resistance, right? Low resistance. Okay, King S. Okay, I got you. What's up, King S? All right. I'm glad you here, King S. I'm glad you learning, right? I'm glad you learning. Make sure y'all hit that like button. I got to get X together over here right quick, right? I got to get X together. So before I get X together, let's listen to something right quick. I got to make some posts on X because I got no traffic over here. There's 0 people on X. So let's play this right quick and I'm going to come back to the markets. This is about the Clarity Act, and we're going to let these people talk about the Clarity Act, right? So let me go ahead and play this. All right, my bad. All right, let me figure my sound out. Damn it. 1 second, y'all. I'm sorry. I apologize. Settings. I don't know what the deal is. 1 second. Trying to multitask over here and I'm fucking up. My bad. All right, let's try this again, everybody. I'm gonna try this again. Matter of fact, I hate that I even did that. You know what I'm saying? So I will come back to this video. Let's come back to the charts. Fuck it. I sent my post out. I was trying to send some posts on X to drive some traffic. Forgot I was on mute. So let's keep it moving, right? Let's come back over to the charts. All right. So like I was saying with this, the 10-year bond, right? If you was to short this, right? I'm teaching y'all concepts. If you was to short this right now, it'll probably take a few days, right? It could probably take a few days or a few weeks because look, this consolidation right here has already been for 8 days. So it could take some time, right? It could take some time. So let me see. That's the 10-year. So, all right. Now that I'm looking at a 120-day range, right? I'm looking at a range of 120 days. And when I find that range, I'm going to find the high and the low of that range. So the high of that range is right here where I got my cursor at. I'm going to find the the high and find the low right here, right? So that's my current dealing range that I'm currently looking at. And TZ, I'm going to answer your question here in a second. Let me see. Dealing range. All right. Y'all tell me in the chat, is the 10-year bond in a discount or premium currently? TZ, boss, when taking plays off the 50% level in the form of continuation or pure reversal, what things do you look for to validate that the setup outside of touching the level? I look for inefficiencies or order blocks or fair value gaps or liquidity pools. Those are other things that I'm looking for confluence. And then you got to also have a bias. You got to have a directional bias, right? So you got to have an understanding of the higher time frame and what the higher time frame is trying to do. Shep, me either. It's an illusion. YouTube is suppressing good info. Okay. Appreciate it, Shep. It's an illusion. Got you. Yes, y'all are right. AWB is Shep and Dorelli. It's at a discount. So being that it's at a discount, it's also at a heavy discount as well. So when you're looking at the dealing range and you determine the premium and discount of that range, clearly heavy discount. I can see this rolling over, right? This is the 10-year bond. So if the 10-year bond sells off, right? If the 10-year bond just sells off and rolls over, what does that do to the dollar? Y'all let me know in the chat. What does that do to the dollar? Who knows how the markets move? Move? Let me see if I can find this documentary right quick so I can give y'all a brief explanation of what the fuck is going on, because we lack it. It's not y'all fault. It's nobody's fault, but the education, people are, we living in hell pretty much. But happy Mother's Day. Yes, pushes up. Y'all are correct. Pushes up, right? So it'll be so if the treasury comes down, the 10-year bond sells off, right? That's going to force the dollar to rise. That's going to make the dollar more expensive in normal conditions. Now, when I say normal conditions, we are living in some interesting times at the moment, right? So everything is pretty much distorted. There are no more rules to this game no more. It's 100% manipulated. So just because in normal conditions, when the bond sells off, the dollar goes higher. Right now, a geopolitical event can happen. Something can happen. What's the new virus? Shit. I forgot the name of the new virus, but the new virus, y'all might want to watch that because this seems very similar to that one virus we had back in 2020. So it could be something as little as that can set all these markets off and send them just going anywhere. Yeah, the Hana virus. I'm going to say haunt you because that virus right there might haunt you, right? The haunt you virus. Yeah. Shep, spent lots of time with my mom today. It was an awesome day. Shout out to you, Shep, and shout out to your mother. It's an illusion. We're probably in hell already. Our dumb asses not knowing, everybody kissing that. It's illusion. You be going deep, bro. You be going deep. Pause. You be going deep. Make sure y'all hit that like button, subscribe, right? Subscribe. If y'all want to get in the Discord, the link is in the link is in the chat. So yeah. 10-year bond. So right now, based on what I'm looking at, I'm currently bearish. I want to see liquidity below the market. If you don't know, price always seeks liquidity. Price always seeks liquidity first. The language that I'm speaking is from a coder's perspective, right? The language that I speak is like a code. So algorithms like to fill in inefficiencies, right? The price leaves behind inefficiencies. So the algorithm likes to refill inefficiencies, and it also likes to seek liquidity, right? Liquidity is how the markets are able to move up and down, right? Because there's liquidity, there's something called a float. So the market makers, they engineer the markets, they leave behind liquidity above the market, they leave behind liquidity below the market. And retail and dumb money, they get trapped in between, not knowing that the game is rigged. So by looking at this chart right here, I'm sitting here looking at these equal lows below the market, right? Whenever you see equal lows or equal highs, right, you better believe there are pending orders, right? And it kind of sticks out. You got to train your eye to kind of see it, but it sticks out over time. But I'm looking at these lows for the 10-year, and this is a level of interest, and also these lows as well. These lows, they're kind of relatively equal. So the market makers, once you see it, you can't unsee it. They're leaving behind their footprints in the market. They leave behind their footprints in the market, and when you can see it, you cannot unsee it. So this is what I'm trying to tell y'all. I'm bearish on the 10-year. And I'm probably going to see a sell off. We might see a rally in the dollar in normal conditions. But right now, nothing is normal based on all the shit that's going on. So remember I said that. But that's the 10-year, right? And if you look at the 10-year yield, which I'm about to pull up. 1 second. All right. So if we look at the 10-year yield, right? If we look at the 10-year yield, it's the chart below me, right? It's the chart below. The 10-year bond is the chart above. The 10-year yield is tagged to the interest rates, right? So if the 10-year bond sells off, the 10-year yield rallies higher. Do you see the correlation? Y'all press 1 if y'all see the correlation. You should know this. The dollar is pegged to the yield. The yield is representing the interest rate. Y'all press 1 if y'all understand. All right, appreciate it, Dorelli. Understanding that, right? Understanding that we following the money. This is how you do it from a technical perspective, right? Let me see right quick on X. I don't know. X ain't showing no love. I had like 2,000 people follow me last week, watch me last week, but now it's like, what the hell? Maybe it's Mother's Day. I don't know. 1 second. But anyway. Yes, appreciate it. Okay, so yeah, you can see the 10-year bond selling off, which forces the 10-year yield to rally, which forces the dollar. It hasn't rallied yet, but let's come to the dollar. It's coming to the dollar. So as we follow the money, you start in the debt market and then you flow into the dollar, right? Because the dollar is the world reserve currency. Right now it's currently, I'm looking at the monthly time frame. It's currently consolidating. I already got that vertical trend line, like I just showed y'all, highlighted. But before I go any lower, I want to do this. Teach y'all another concept. This is the monthly time frame. I'm gonna show y'all something that what I call the quarterly shift. So I'm gonna go. You want to start this process, right? I'm gonna drag every trend line to the right, right? Let's start there. Let's drag every vertical trend line to the right. And then I'm gonna draw a vertical trend line. Now, this is not the same thing that I just taught y'all, so pay attention. This is something called the quarterly shift, right? Every 3 to 4 months, the market usually shifts into a new market condition. That's quarterly. So you can view the markets from a quarterly perspective. Every quarter, you should see some type of shift in the market. Usually. So how do you start this process? How do you start looking at it from that perspective? You're going to take a vertical trend line. You're going to drop it on the current monthly candle, which is May 2026. And then you're going to take a clone of that vertical trend line and you're going to drop it on May 2025. So you're going to go all the way to the left to May 2025 right there, right? So boom. When I do that on the monthly time frame, I'm looking at 1 year worth of price action, right? 1 year worth of price action. So 365 days right there from the monthly time frame. So in the last 365 for y'all in the chat, in the last 365 days in the year, what profile is the dollar doing? What market profile is this? The market only does 4 things. I'll tell you because they're algorithmic. What are the 4 things? Which profile is this right here? Dorelli, consolidation. Ed, consolidation. Yes. Yes, it's an illusion. Yes, AWB. Yes, Shep. Y'all are all correct. Consolidation. Make sure y'all hit that like button, subscribe, tap into the Discord. The link is in the description. The link is in the chat as well. But yes, the market profile, consolidation. The market does 4 things: consolidation, expansion, retracement, reversal. The one profile that is stuck in right now is a consolidation profile. So for the last 365 days, which is a year, the dollar has been sideways consolidating, right? So let's finish this concept of the quarterly shift. After you get your yearly perspective, so by dropping the vertical trend line, and look, y'all can apply this every time a new month start. You can continue this process, so you can always start it fresh. So it doesn't really matter, okay, do I need to start January to January? No, you can start it right now as the market shifts to the right? So May to May 2026, May 2025, this is how much perspective I'm looking at. Then I'm gonna take another vertical trend line and I'm gonna start going to the right. You start from a year ago, then you go to the right, 1, 2, 3, right? In some cases you can go 4, but normally every 3 to 4 months the market shifts. In this case right now, I'm only going to do 3. After you do that, you take another vertical trend line, 1, 2, 3, and then you're going to repeat the process one more time, 1, 2, 3. Now that yearly price action, that year's worth of perspective right there. Now it is. We have broken it down into quarters, right? First quarter, second quarter, third quarter, fourth quarter. After you do that, you can start dropping down to the weekly, right? So now I'll drop down to the weekly. So now when I'm back on the weekly, right? Or when I'm on the weekly, this is how you can view. You already know from the past year, the dollar has been consolidating. The dollar has been in a consolidation. You've known that by zooming out, looking at the market. Now you can see what happened for the past year, each quarter, right? Let me read the comments. All right, cool. So now you can understand what the dollar has did for the past year, each quarter. So you can go back to the May last year time frame, that quarter, May to July, right? You can go back to May to July. You can see what the market did. It opened, went higher, sold off, consolidated, draw down, took out liquidity right here, right? Rallied up, created a high at the quarter, started the third quarter, went up, took out the high from the third quarter, sold off, went down to sell side liquidity. So let me show you. Let me zoom in right quick. And it's going to look a little better when I go down to the daily. But this high right here, buy side liquidity, swept that, sold off, went down, took out the sell side liquidity. So let me ask y'all in the chat. Let's do the pop quiz thing. If you was to take entries from the monthly and weekly, right? Because you can take trades, whatever. I don't care what you're looking at. You can take trade entries based on the monthly, weekly. And what kind of trader would you be if you're taking entries from this time frame right here? What kind of trader would you be? For example, y'all check this out in the chat. Y'all take a look at this. As I zoom in, before y'all answer that question, or you can answer that question. But before I go further, what kind of PD array is this right here? It's an illusion. Swing trader, Shep, swing, AWB, swing. Okay. What kind of PD array is this in the chat? What kind of PD array is this that I'm highlighting? If you can see my cursor. Dorelli, volume and balance. Shep, volume and balance. Yes, yes, yes. Y'all are correct. Remember, I'm looking at the dollar if you're just joining. That's a volume and balance. So let me highlight the volume and balance right here. I'm going to drag it out all the way to the right. And in that case, I thought it traded into it, but it didn't trade into it, but it took out liquidity, right? It took out the liquidity. But anyway, it trades up, right? Takes out buy side liquidity. Barely trades into this. But it sells off, right? And when it sells off, it sells down to here. How long did that trade take? Let me show you. Let's say you enter at the high of this candle right here and you held it to this candle right here. That right there took 10 weeks, right? 10 weeks, over 70 days, or about 7 days, right? 70 days, my bad. It took about 70 days. If you're holding a position for 70 days, what kind of trader are you? I'm going to ask that again. AWB, it taps the BTC. Anybody know? Dorelli, long term, it's an illusion. Swing. Well, I guess it's relative. I mean, I guess it's relative. Some people might say, hey, 70 days is long term. Some people might say, hey, that's swing trading, right? That's swing trading. I can hold for a few months at a time. But some people might say, hey, that's long term. So for me, I mean, nowadays, right? Nowadays, holding something for 70 days, crypto. Holding things for more than 70 days, right? You know, you already know what that gets you, right? When you get, I mean, we are resilient in crypto, right? We done held shit for years. If you don't held something for years, you're a traditional investor. But holding something nowadays for 70 days, right? You kind of insane, to be honest, because there's all kind of moves that's happening and you could be taking advantage of it, right? But again, we learning, right? We learning. We don't have all the answers, but we learning. But yeah, on this third quarter of last year, went up, took 70 days, traded down. And guess what? Underneath this low right here that I'm showing you, right? Remember, the dollar is consolidating on a higher time frame. It's consolidated. But buying this back right here, smart money, they bought it back underneath here, right? And then they held it back up to this high. You see this high? Can't make this shit up. You see this high right here, right? It didn't trade into this volume imbalance. It fell just short and then sold off and took 70 days, right? That's a long time, you know, in today's time frame in the markets. It took 70 days from this high down and then they bought it back. How long did it take to come back up? Take this swing high out as liquidity and trade right back into the volume imbalance. How long did that take? Well, let's put it in perspective. So let's just say you hypothetically enter underneath this candle right here and you held it back up here. Well, guess what? That took about 6 weeks, 42 days. So again, is that long term or short term? Right? Is that long term or short term? It's an illusion, except Lenny. Oh yeah, Lenny's different. Lenny's different. 1 second. Okay, we got some traction. If you on X, please repost the live stream. If you on X, please repost the live stream. AWB said long term. But anyway, yes, all of this back and forth in the dollar, right? There's price movement back and forth. But when you look at it using the quarterly shift tool, like I just showed you, you can view this from a longer term perspective. So remember, when I'm looking at the bonds, the yields, I'm looking at it from a higher time frame perspective. Also, when I'm using the dollar, right, I'm looking at it from a higher time frame perspective. At times, I might look at it intraday, but I'm mainly tracking it from a daily perspective or a yearly perspective. And the dollar so far has been in a consolidation for over a year. Now, being back on the daily, you remember the 120-day range, right? Remember the 120-day range. Well, we're going to overlap that and blend it with the quarterly shift. These concepts, the algorithm, they blend together. Once you start, if you're not paying attention, right, you're not using the free analysis that I'm giving you. If you don't test this shit out for yourself, I don't know what to tell you. There's no excuses, because all it takes is for you to investigate it and look at it for a few months, and then it's going to click. It's going to click, and you're not going to unsee it. So if you're not kind of paying attention, because what I'm showing you right here, right, what I'm showing you, I'm using two concepts that overlap with each other, right? It's like a painting that you cannot see. If I remove all of this shit off my chart, you're not going to understand what I'm talking about. You're just going to see candlesticks, right? But I'm putting these vertical trend lines and stuff like that. The one element that y'all cannot see in your chart is time. Time, when it comes to the market, time is the element, right? Everybody can see everything else, but time is the element that most people can't see, right? Make that make sense. Time is the element that most people can't see. And yes, you 100% can time the market, but you got to have certain things, certain concepts that help you see it for yourself. I'm just giving you the keys to the goddamn vehicle for free. But I'm already knowing people not going to investigate it. So once you do this, so what I say with this, if you take about 5 different charts, right? Take about 5 charts, and you do this same concept that I'm showing you on each one of those charts, where I'm showing you the quarterly shifts and I'm showing you the look back and the forecast tool, which is about 120-day perspective. Once you start doing this, the higher time frame is going to unlock for you. You understand what I'm saying? If you start doing this, the higher time frame will unlock for you, which most people struggle with higher time frame analysis. That's why when they're trading, they're getting their trades wrong. They don't know. People gambling, they have no idea what the higher time frame is doing. So these two tools, these two concepts that I'm giving you, it will unlock the higher time frame. All right. So I don't know what else to tell you. I'm preaching to the choir, I guess. So after I do the quarterly shift, you confluence it, or you lock it in with the look back and the forecast. And that's that 120-day range that I'm looking at. Now, knowing that we're consolidating on the monthly, this is the only thing that I'm kind of paying attention to right now. Right? This is the only thing that I'm paying attention to right now as far as day-to-day price movement. Now, there's some times where you have to zoom out a little bit further to get a clearer picture. But for technical, getting y'all to understand what y'all need to start looking at, this is where you start, right? And then everything else you can work towards, like the yearly, the 6 month, the month, the 3 month, or intraday. I'm giving you the foundation and the building blocks to start right here. And then you work and start building other pieces to the house later. Right? So this is the dollar, right? I'm looking at the 120-day range. Let's go down to the daily, from the weekly down to the daily. And this is what that year looks like with the quarterly shift, and then also with the look back in the forecast, right? So you can see a little bit clearer what the dollar's doing. This is how much perspective I have on my chart. This is how much canvas I have on my chart. And when you zoom in a little bit, you can see how we started the quarter, or January. We started January out the gate, the dollar rally, right? This rally up. And I don't know if y'all can see this, right? Trying to make y'all see this, how the market is repeating. So once you understand that the market does consolidation, expansion, retracement, reversal, once you understand that the market is either trying to fill in a gap, which is a inefficiency, or seek liquidity. All right, let me start it over. Consolidation, expansion, retracement, reversal, liquidity, fair value gaps. Once you understand those concepts, then you can start saying, hey, look at this market maker buy model. Look at this market maker sell model, because that's all the market does. It goes from a buy program to a sell program. Are y'all not seeing it yet? So, for example, let's go back in time, right? Let's go back in time, trying to unlock the code for y'all to help y'all fucking see it, right? I feel like I got to talk to y'all like that because I'm giving it to you. Pause. But look, you see this rally up, right? Do you see this rally up? And some of y'all already know this. And I'm trying to find a better way to illustrate this. Let me see. Anyway, this is going to have to work for now, right? This is going to have to work for now. I'm going to give it a black color. So when this rallies up, right? This is a what? What kind of program is that rally up? One second. AWB, the market maker buy model, yes. Shep, buy. Dorelli, buy, yes. Y'all can see it, right? This rally up, right? This is a market maker buy model, right? And when it's a market maker buy model, it goes up. It's a buy program. Now I'm gonna get into high resistance, low resistance here in a minute, but it's a buy program, right? And it goes up. And it takes out what? Either inefficiency or liquidity. But in this case, look, it rallies up. It goes up and takes out this high right there. Y'all might not see it. Let me zoom in just a little bit. In this market maker buy model, right? It went up. It took out liquidity. This swing high right here. Sweeps it with precision, like a knife, right? Like a diamond cutter or something, right? Like a laser beam. It cuts through it. Well, it sweeps it real swiftly. To the moon, what's up? Shout out to New Zealand in the building. Shout out to New Zealand. But look, it goes up, it sweeps the buy side liquidity. What did I just say? The market seeks liquidity or inefficiency. That's all it does. It does nothing else. The markets are algorithmic. After it sweeps liquidity, right? It goes into a phase of consolidation or accumulation, right? And when it accumulates, or they're offloading their long positions from the market maker buy model. And after they do that, they send the market into a, what is that right there, y'all? What is that? What is that right there? This is a complete system, right? There y'all go, Shep. There you go, Dorelli. Market maker sell model, right? This is a complete system that repeats over and over again. I don't know if y'all can see it or unsee it. Might take y'all some time to study it. But this is a complete fucking system, unlocking the markets, right? Once you start putting all the pieces together, you got to start just putting them together. You got to take hours and hours learning one system, right? Learn what is liquidity, right? It might take you months just understanding liquidity. What is inefficiencies? What's a gap, right? The gaps come in many forms. You can get a SIBI, a BTC, inversion, many types of gaps. Yes, market maker sell model. So look, the market maker buy model, you can be a buyer just on the market maker buy model. It goes up, hits liquidity. There's certain things in here that I'm gonna keep to myself that happens in this, knowing when it's gonna drop, right? And then it goes into a sell model, market maker sell model. And when it sells off, it drops down, takes out the liquidity, right? So it goes for a buy side liquidity right here. Do I need to label it so y'all can comprehend? All right, not insulting y'all, but I'm just trying to get y'all caught up to speed and make y'all see what y'all can't see. Buy side liquidity. Now, in my personal charts, I'm very detailed, right? You got to get very detailed. You got to get organized. But I'm just showing you that swing high. Why does the price go to that high and then pivot on a dime and then drops down and goes to this low right here, right? Sell side liquidity. Do I need to label it for you, right? Let's label it so you can understand what I'm talking about. So you can understand the markets are algorithmic. Wait. Okay, yeah. Sell side liquidity, right? Liquidity is important. I know what their orders are. I know what their orders are. Do you know what their orders are? How many people could say, hey, I know what the institution's orders are in the market at all times? I don't know what to tell y'all, right? I might not fit the description for as somebody who knows that, but I'm sitting here telling you, I know what their orders are in the market, right? I know where they are. So it goes from a buy program or a buy model, hits liquidity, and it instantly goes into a sell model, hits liquidity, and then guess what? The process repeats, instantly goes into a buy model, just like this, right? Buy program. Do y'all not see this shit? Right? Do you not see it? And then after I break this down, I'm gonna show y'all some things. It goes into a buy model. When it goes into the buy model, it goes up, takes out liquidity, right? Takes out liquidity, hits the liquidity, and then goes right back into a sell model, right? Just like this. I don't know if y'all can understand how deep this goes, right? I don't know if y'all can deeply understand, like, okay, wait a minute. Is it not hitting you yet? Are y'all not seeing it? It might take some time for some of y'all, right? But look, goes into a buy model, sell model, buy model, sell model. Can you not see it? Don't know what else to tell you. And that's why I'm saying, if you're not paying attention, if you're not actually applying, you letting a gold mine, you letting gold just slip through your hand, right? It's almost like, hey, buy Bitcoin. It's almost like, hey, buy Bitcoin, and you just not listening, right? This takes a little bit more work, right? But it's almost like saying, hey, buy Bitcoin in fucking 2010, and you didn't do nothing. Hey, I don't know what to tell you. Shep, go down more, right? Okay. Buy model, sell model, right? I'm able to do that by giving y'all the unlock to the higher time frame. Buy model, sell model, buy model, sell model. That's all it's doing, is seeking liquidity, right? Look, before even over here, goes up, buy model. This right here was a sell model. It just repeats, especially in consolidation, right? When the market is in consolidation, you can see it. Now, each profile, each program or profile, that what I'm saying is like consolidation, expansion, retracement, reversal. Each profile has their own characteristics. Each profile comes with their own different model, right? So if we look at the equities, we already know we're trending in the equity. We're trending in the equities market, like we're in price discovery. That requires a whole different model within itself. But if you understand, if the higher time frame is in a consolidation, expansion, retracement, reversal, that allows you to pick a model, go in there and kill the market, right? Kill the market, and you can see this process just repeating: buy model, sell model, buy model, sell model. Whenever it's like this, right? Now let's get a little bit more technical, right? Let's get a little bit more technical. For example, y'all in the chat, what is this right here? What is this right here? This black down close candle. What is that? Shep. It's investing the BTC on the buy model. Let me break it down a little deeper, Shep. What is this candle that I'm highlighting right here? What is this candle that I'm highlighting? AWB and Dorelli, SIBI. Yes, that's a SIBI. So let's go ahead and highlight that SIBI right here. And this was back in August of 2025. SIBI right there, trades into it, right? Tags it, same fucking philosophy. It's a higher time frame entry, right? It's a higher time frame entry. So AWB, this is how I'm looking at the market on the higher time frame. And when it trades into that higher time frame, let's say you enter right here. And let me get this another color. Let's say you enter right here in this SIBI right here on the higher time frame daily, right? Everything below the daily time frame is intraday price action. Remember that. Everything below the daily is considered intraday, but I'm not looking at this market right now intraday. But imagine shorting this market right here. Guess what day this was? Take a random guess. Take a random guess. And when this candle, and I'm talking about day of the week, but when this candle trades into this SIBI right there, if y'all understand when I tell y'all the market creates the high, the low on specific days, what day of the week is this right here? When the candle trades into the SIBI. Let me know in the chat. If y'all on X, please reshare, repost the live stream. Appreciate it. Repost, share the live stream. Technical Sundays. Who knows? Who knows? Come on now. Who knows? Nobody knows. All right. So there you go, Darrell. Appreciate it, Darrell. You always come through, bro. You always come through. So normally when I tell y'all the high, the low forms on a Monday, Tuesday, or Wednesday, well, check this out. On this particular week, way back in August of 2025, this candle that wicked into this SIBI, it was on a Tuesday. That Tuesday created the high of the week. So if you was to enter at the high of the week, and I'm seeing all this on the daily time frame, by the way, if that candle right there was the high of the week for that week right there, and you held it, what are you holding for? Well, let's say you hold it for, let's do this right here. See this right here? This is a BTC, right? This is a BTC right there. Right, BTC, buy side imbalance, sell side inefficiency. You enter at the high of the week right there. You get out, let's say at the bottom of the BTC, right? The bottom, the very low of the BTC. That's where you're getting out at. How long would that have taken you, right? If you was to buy here, short here, hold it to here, right here, bottom of that candle, that would have took you 5 trading days. So if that takes 5 trading days, what kind of trader are you, right? What kind of trading style is that? What kind of trading style is that? All right. So that's a short-term trading style. It's not a swing trade. It's short-term trading. Short-term trading is holding 3 to 5 days, a week at the most. That's a short-term trade. That's not really, you could consider that a swing, but a swing would have been something like holding it for the next few weeks and then it drops. And when it drops, what does it attack? Sell side liquidity below the market where the pending orders are. This would be a swing trade if you hold it, right? If you would have held it. But if you was to get in right there, high of the week, and trade it down to this low right here, bottom of the BTC, that took 5 trading days. Anything else, it would have took you, let me show you. From entry to this low right here, that would have took you 43 days. That's more swing trading. Yes, swing trades can take up to 43 days, like 2 months. So that's 43 days right there holding that short. Right? So that's that. But again, this right here is a whole complete model. Whenever the market is in a consolidation, you can do some amazing things, right? You can do some amazing things when it's being held in a consolidation. That's a complete model right there that I just gave y'all. So y'all just go back, right? If you just go back and watch the live stream, and I'm looking at the dollar, right? So let me go ahead and get my projection on the dollar. The dollar currently is in a market maker sell model, right? It's in the market maker sell model currently. On the daily time frame, it traded down. Let me do this right quick. Let's get a dealing range for the dollar. So let me clear this up so we can get a directional bias for the dollar, right? The bias can always change, right? Accept the fact that you're not always going to be right, right? That's one thing, acceptance. You're not always going to be right, but accept the fact that you can be wrong in your bias and it can always change. That's what you do as an analyst. But if I look back, at least, let's say from the current candle, let's go back 40 days right there. All right. That's a 40-day range right there. So this swing high down to this swing low, that's a dealing range, 40-day look back from the current candle. And we look back 40 days right here. Is the dollar in the discount or premium right now currently? That's a dealing range. Is the dollar in a discount or premium? It's currently on the daily, it's trading down into a inefficiency right here. It's trading down into a inefficiency. Shep, yes, discount. Yes, AWB, discount. So right now the dollar is at a discount. In the past 40 days, this is the current range. You can also get a 20-day range on the dollar, but right now this is where it's at right now. I'm also, remember, looking at the bonds. It looks like the bond right now, almost look like the dollar is kind of correlated with the treasury a little bit, right? It kind of is. So let's pull up the 10-year. Normally they're supposed to be inversely correlated. But looking at the 10-year bond right here and then looking at the dollar, they're both in like sticky situations. So sometimes you have to kind of zoom out because one of them is going to go one way and the other one is going to go the other way, right? So it's that game right there, right? So which one does what? They're both sitting at discounts in their respective ranges. So what do they want to do? Remember, the market's in the consolidation. So right now for the dollar, right? If I had let me show you right quick. Let's zoom out 3 month. On the 3-month time frame, I don't like it. Let's go out to the 12-month on the dollar. 12-month on the 12-month time frame on the dollar. Right, 12-month time frame on the dollar is sitting inside this BTC right here, and it's kind of being held. Right, it's being held. Hide that. Yeah, the dollar's just consolidating. I'm looking at where it was. It traded up on the 12 months. So every one of these candles are 12 months, right? Every one of these candles are 12 months. It traded up, tagged that PD array right there. That's a SIBI. Tagged it a year ago. It left it. And now so far this year, we're just consolidating. That's all we've been seeing so far this year. And also on the 12-month time frame, we're trading inside of a 12-month BTC. Buy side imbalance, sell side inefficiency right here. Right, so it's trading inside of a BTC. We're consolidating sideways, and the current dealing range for the dollar is this swing high right here down to this swing low. That's the current dealing range on the 12-month time frame, right there. And right now we're near what? Y'all tell me in the chat for the dollar index. It's a hard read right now, right? Because everything is dependent on the debt market and this currency. So it's in sticky situations right now. It's in a sticky situation right now. It's the dollar. When you look out to a yearly perspective, right, and you find a range, which is this high down to that low, is the dollar in a premium or discount? SHEP equilibrium, yes. AWB equilibrium. So yes, it's pretty much near equilibrium. It's just trading sideways. And what do I normally tell y'all when price is near equilibrium? Right. So when I'm on the daily, that's like, it's a hard read on the daily time frame. I'm telling you that now. I don't know which way the dollar wants to go. But when you zoom out, you get a better picture. When you zoom out, you get the better picture. Dorelli, wait for more data. Yes, I normally wait for more data, right? I really don't pick a side because the dollar, this is showing me right now that the dollar could go either way. It could go either way. Yes, AWB, it can go both sides. So what do they want to do with the dollar? Because everything else is being held up because of this currency. And then also by it being near equilibrium, right? This is where you start tying in the geopolitics as well. The dollar index is it's a geopolitical currency. So you got to watch geopolitical events like we've been seeing. And the dollar index is currently consolidating right now. And it's tying in with the overall narrative with, are we at war? Are we at a ceasefire? Are we talking about peace? Are we coming to a deal? Then we're not, right? So all of that is reflecting. All of that is holding the dollar index up. Also, we got a new Fed chairman coming in, right? What's going on with that? Is Jerome going to stay? Is he going to leave? Let's come look at the economic calendar for the week. Let's look at the economic calendar for the week. Make sure y'all hit that like button, subscribe, right? Hit that like button, subscribe. If you're on X, reshare the live stream. But looking at the economic calendar for the week, we have no news tomorrow. So y'all in the Discord, if y'all are trading, remember there's no news. Normally it's a sentiment day, right? Sometimes you gotta just let it go and let them build sentiment on the Monday. But rest of the week, right? They can flop Monday and hold Monday for Tuesday, Wednesday, Thursday. Right, so they can bullshit on Monday and then hold the markets up. And if you're just joining or you're brand new, I'm talking about the futures market. Right, I'm talking about futures, that market or any market that you're looking at. Right, it don't matter what you look at, but I specialize in the futures market. So with that being said, we see the economic calendar. We looked at the 10-year market, the treasury, the bonds. We looked at the dollar. Right, I'm neutral on the dollar. Keep that in mind. I'm neutral, and I think the 10-year bond is going to sell off, right? There's liquidity below the market, so I can see the bond selling off. That normally should push the dollar higher. If the bond sells off, the dollar, if I had to flip a coin, I'm going to push that it goes higher. We shall see. If the dollar goes higher, that's going to bring the markets down, right? It'll be a risk off environment. So we shall see. I could be wrong. I'm not, hey, this is what we do this for. We're not here to be perfect. We just trying to, look for opportunities. So with that being said, let's come over here for y'all in the Discord, for y'all that are brand new, coming over here to the NASDAQ. This is the current contract. This is the June contract, current contract that we follow on the day-to-day. Matter of fact, before I proceed, right, let me ask y'all in the chat, do y'all want to go over crypto or this first? Y'all want to get into the futures markets or do y'all want to get into crypto first? Let me know in the chat. Do we want to go over what opportunities we can look for right now as far as traders, or do we want to go over the crypto? Do we want to go over the crypto news? Ah, shit. Look at this. Look at this. We got the futures fans in here. Yeah, man, I done converted y'all. I'm glad. I done converted y'all. Let me make a quick post right quick and I'm gonna go over it. Right, we're gonna go over it because this, I can see where it's at. People want them opportunities right now. I appreciate it though. Okay, everybody saying fuck. Y'all saying fuck crypto? It ain't fuck crypto. It's not fuck crypto, but I understand it's like, that shit, it is what it is. I'm finding out that this might be more interesting for people. We shall see. Let me see right quick. Let me make a quick post on X. All right. Read the comments. It's an illusion. It is though. AWB, it is what it is. I hear y'all, man. I hear y'all. All right. So we're going to get into the futures market. I'm about to just say the hell with crypto. No, I'm bullshitting. I'm not going to say the hell with crypto. All right. So welcome to my world with how my charts look currently, right? I always do different things, but right now I'm looking at the NASDAQ futures, right? I'm also going to have the ES as well and gold. So we're going to look at three markets: ES, we're going to look at gold, and we're going to look at the NQ, right? So right here, this is ES, right? June contract for ES, and then I'm looking at gold right here. Gold futures. I need to get the current contract. Y'all tell me in the chat, what's the current contract? What's the current contract for gold? If you know in the chat. If not, I can look it up, but I'll get there when I get there. But let's start on the NASDAQ. I primarily trade on the NASDAQ. So what you're seeing is a 3-screen split, right? I'm looking at the 3-screen split. On the left side, I'm looking at the higher time frame, right? And y'all about to watch me walk through my chart live, right? It's an illusion. June. Okay, let me see. If you know the contract month, let me know. Matter of fact, let me see if I can go. MGC, gold futures, COMEX, drop down menu, and June. All right, let's go to the June. So there we go. I appreciate it. I appreciate that. It's an illusion. Got the June contract. All right, we're gonna look at the June contract. Let me do this 3 split screen over here. All right, get my left, come over here. That still say February. MGC, and I'm looking at the micros, right? I'm looking at the micros. If y'all know, I just started the prop challenges. I just started prop challenges, so I'm getting into that. See if I can milk these damn prop firms what they got. All right, MGC. All right. All right, so save that. All right, let's come to the NQ. I appreciate y'all being patient. So on the left side of my chart, right? On the left side of my chart, that is the higher time frame. I always start on the higher time frame. Matter of fact, we're going to start on the monthly time frame over here on the left. On the top right is going to be my intraday. Well, on the right side of my screen is intraday price action. On the top, I'm going to look at the higher time frame, either 1 hour. I like to look at the 1 hour on the top. 1 hour to 15 minute, or 1 hour, 30 minute, 15 minute. That's what I'm looking at. That's how I'm looking at the market on the top right. And then on the bottom right, I'm looking at all session trading, meaning 15 minute, 5 minute, 1 minute, and sometimes second charts, right? So I'm looking at, on the bottom right of my screen, I'm looking at live price action. So if you look at this chart right now, this is a 1 minute time frame on the bottom right. This is the NASDAQ currently ticking, right? So I use this mainly for entries. The bottom right is my entries chart. Everything else is showing me direction, the direction I want to see. Am I in sync with the market? Is the higher time frame in line with the, like, is the weekly in line with the 1 hour? Is the daily on the left? Because normally on the left, I go from monthly, weekly, daily. I don't go below the lower time frame, or excuse me, I don't go below the daily on the left. On the right side of my chart is all intraday price action. So again, y'all can be learning how to view the market once y'all learn this, right? So just trying to put that battery in your back. Stop being lazy. All right. So on the monthly time frame over here on the left, that's where I start at, right? It is currently May. Let me blow this up right quick, right? Higher time frame analysis, top down. Another concept that y'all should be picking up when I start my analysis, top down analysis, monthly, weekly, daily. Look over on the right. That tells me the contract, the month, and the year, and also how many days we have left in the month. We have 18 days and 19 hours left in the month of May. So there's plenty of opportunity before we close out the month. Now, whenever I'm looking at the futures markets and I'm looking at the NASDAQ, I also pull up the continuous contract. So what I'm going to do is I'm going to come over here to equities and I'm going to look at the NQ continuous, right? I like to have both of these charts up at the same time. I only do this for the market that I'm trading. I don't do this for all markets because the contract, as you can see, the current contract, look to the left. The data falls off. There's no more data when you look to the left, right? There's no more data. AWB, boss, squeeze out the juice from the prop firms like the juice squeezer. That's the plan, AWB. That's the plan. But looking at the continuous, right? Looking at the current contract, there's no data to the left. That's why I pull up the NQ continuous, right? And you can see when you do that, there's more data. So I like to have both of these up at the same time, but the one that you actually trade is the contract. You don't trade the continuous. The continuous gives you more data to refer to. And as you can see, if you apply the same tools that I showed you on the last charts, the dollar, the quarterly shift, in the 120-day range that I showed y'all, I do the same thing on the NASDAQ, right? I do the same thing. And as you can see, market has been what condition, what profile is the NASDAQ currently in for y'all in the chat? If y'all on X, make sure y'all share that live stream, hit that follow button. Who's going to answer that question? What market profile are we currently in? It's an illusion, market maker buy model. But yes, is it a consolidation? Is it an expansion? Is it a retracement, or is it a reversal? Which profile is it out of the 4 profiles? Listen, don't get it confused now. Yes, it's in the buy model. It's in the buy program, right? Yes. Yes, Dorelli, expansion. So yes, expansion. So being that it's in an expansion, there's a whole different ball game that you got to play by. It's not the same rules, or it's not the same models that I just showed you when I showed you the dollar, which is consolidating. It's a whole different complete model when it's trending or when it's an expansion profile, right? It's a whole different model. So whenever it's in this condition, and what makes it a little difficult is This market is in all-time high price discovery level, right? It's in price discovery, all-time high levels. We don't have nothing to refer to the left of the chart. Nothing. The sky's the limit, right? There's no ceilings. But somewhere above the market, smart money, the market makers, right? Somewhere up here, and it could be anywhere. The NASDAQ is currently trading at 29,000. They could take it to 35,000 right here and have sell orders, right? At least hypothetically, they already have orders up here to short the market down. So people right now that are chasing this trend higher, right? You don't know when they're going to pivot on you. So you got to be cautious, but you got to stay with the trend. When the market is like this in price discovery and it's trending higher, you stay with it. Don't be trying to short the market when there's nothing to key off of. Why would you short this unless you know what you're doing, right? It takes experience. But to filter out any mistakes, you can just stick with the trend of the market and only go long if you're looking to trade it. Right? Does that make sense? Just stay with the trend. Don't fight the trend. It's trending higher for a reason. Stay with the trend if you're looking for trade opportunities. Don't even try to go short until it starts showing its hand, right? So, excuse me. This is a weekly time frame, right? Now let's go down to the daily. I'm bullish. It's clear as day. I'm bullish. The market is bullish. There's nothing else to discuss. There goes your bias for y'all that's in the Discord and for y'all that are watching. The bias is bullish, right? Why would you go in there and be like, hey, I'm going to short this market? No, you look at the higher time frame. It's bullish, right? Even if I go out to the 6 month time frame, look at this chart on the 6 month. Bullish as fuck, right? Go back down to the monthly time frame. Bullish. Weekly, bullish, right? Go down to the daily, bullish. So the bias is bullish. The trend is bullish. There's nothing to reach for. There's no liquidity above it. So what they're going to do at this point, they're going to have to engineer liquidity at some point on both sides of the market, right? They're driving it higher. As y'all can see, all the capital, all the money in the world is currently in the stock market, right? And for y'all that are crypto enthusiasts, this money is going to flow. Follow the money. Right, that's the name of my theme that I like to go with. But the money is going to flow into a different sector at some point. But right now, the money is in the stock market. I'm talking about hundreds of trillions. It's an illusion. 10 minute bullish, 15-second bullish, 100 ticks. That's funny as shit. Yes, bullish. God damn it. Stay with the trend. Because look, on the daily time frame, right? On the daily time frame, when the market sold off, took out a lot of liquidity. Right. And we traded this, right? We was in this. We've been in this since last year. It traded down, right? And it hit a key level on multiple time frames. But on this time frame, it's the daily. I'm going to use the daily. It traded down, hit this level right here. That's a BTC, buy side imbalance, sell side inefficiency. Traded down into that, bing, just like that. That was back on March 31st, last day of March. And then it took off April 1st, which is April Fool's. You can't make this shit up, y'all. You tell me, right? It was doom and gloom. We thought this market was about to go crazy and sell off. But you tell me on April 1st, the market hits a key level on the last day of March. April 1st, right? Check this out. April 1st is this candle right here. April Fool's Day, right? And then the next day on April 2nd, it trades down into this BTC. Right? Do y'all see this? Press 1 if y'all see this. And you tell me who's the joke on, right? Because it's in the market. They can't hide it. This shit is the Matrix. And I'm one of the ones that figured it out, right? I'm a Neo. But on April 2nd, it trades down into the BTC. Smart money accumulates at the BTC and then boom, takes off just like that. Do y'all see that? Do y'all see that type of price move? Can't make it up. And they do it on specific dates, right? They do it on specific dates. How many down close days, right? Ever since April 2nd, from April 2nd to today, it's been 39 days, right? It's been 39 days since we pivoted from that low to current day where we're at right now. You can count how many down days there was. 1, 2, 3, 4, 5. I'm going to say 5. There was 5 days in the past 39 days that were bearish. Right. Every day outside of that was bullish green days, just like that. Do you see that? right? Dynamic price action. They traded down to what? Inefficiency. Also clearing out all this sell side liquidity, and y'all might not see it, but I just demonstrated it for y'all. Look, market maker buy model, right? To the left, it hits some level and then it goes into a market maker sell model just like that. Now, the only difference is with these market maker buy and sell models are they're high resistance, right? They're not low resistance. They're high resistance. Market maker buy model, market maker sell model hits a key level, right? Pivot, and then goes into a market maker buy model, which is low resistance, right? Low resistance. So you mean to tell me they took an entire year having the market into high resistance conditions, sell it off, and then in one day go low resistance, right? Low resistance liquidity run. So again, same thing, different market. Just you got to understand the conditions as well. So if you don't understand how to know when the market is high resistance and know when the market is low resistance, then you gotta learn that. You gotta learn that concept: high resistance, low resistance. High resistance price action, you can trade it, but it's very difficult, right? You got to be very nimble. You got to be really sharp. You got to be a scalper. But in this condition over to the right, low resistance expansion, market maker buy model, this is the type of market condition that you buy and hold, right? You just buy it and hold it. You just buy and hold, and it breaks all-time levels. So that's what that is. But let me remove some of this, right? I had to kind of like build it up for y'all, because all of that is back testing. That all of that is how you get better at reading price action, by doing those little drills that I just showed you, right? So where are we at right now? So this is a daily time frame, right? We just have been breaking all-time highs. Well, there's really no range. There's really no good range to kind of like frame up, because it's just been vertical, right? It's just been vertical. So I could save a lot of time. Now, check this out as well. When we went into the buy model, right, there was many opportunities, right? So right here, for example, this was a suspension gap, or a BTC. That's a volume balance plus a fair value gap. Right here, that's an entry point, right? That was an entry point on a Monday. Enter, you hold it. Hold it. It clears out. Look at these highs over here. You see these highs? Buy side liquidity, right? These are the old all-time high levels, right? They go for liquidity. They seek inefficiency. What? Fair value gap. They hold it for liquidity. Boom. Buy side. Once they clear the buy side, you can see how the profile switches, right? It goes from low resistance, no down close days, hits target, and then they continue to push it higher, but people wanted the short. But what they do is they play those games and they send it higher. And as they send it higher, well, guess what this is right here? They're still offering more opportunities. But now, if you're chasing this, you're doing it at a premium, right? You're doing it at a premium, and it gets very, very difficult, right? It trades down. BTC. Also, what? Order block. It's an illusion. Anyone else stream just got real choppy? Oh, shit. Y'all let me know in the chat. Order block right here. Order block entry. Y'all press 1 if y'all can hear me. Press 1 if y'all can hear me. All right. Appreciate it. Appreciate it. All right. It's an illusion. I don't know. But look, BTC entry, rally higher, retracement down. Right? Retracement down. When it retraces down, it gives another opportunity right here, right? Volume imbalance right there. Volume imbalance. Trades right down into it. Origin code player. Appreciate you joining. If y'all are brand new and y'all want to join the Discord, the link is in the description, right? The link is in the in the chat, not the description. The link is in the voice chat. The link is in the voice chat. Not the voice chat, but the chat. The link is in the chat. But look, on this day right here, volume balance, opens, trades down, entry, expansion, right? As it expands, creates another BTC, right? They're offering entries. You got to be patient. You got to wait for these retracements. We're at all-time high price discovery, right? Trades down into the BTC, taps it, goes. And here we are right now where we currently are, right? So Let me take some of this off my chart. This is for the people in the Discord that y'all want to look for these current opportunities. Let me take some of this off the chart. We cleared the all-time high. I'm not even worried about that now. So in these market conditions right now, what are we to do, right? What are we to do? This really, you sit on your hands until they offer some type of retracement, right? And we don't know where they're trying to send it. We're entering interesting time. So on the daily time frame, this is what I have on my chart right now. You can go back at least 20 days, right? Start on the current candle, go back 20 days, get that much perspective. And once you get that perspective, you're going to see quickly, well, we just been running off higher, all-time high. So what do we do now? All right. Probably need to look at another market, right? But again, we still taking opportunities in this. Daily. 1 second. Let me see. Oh, my bad. All right. So this was the continuous, right? This is the continuous. That's what I'm looking at. Now, from the continuous, I'm going to go over here to the contract, the NASDAQ futures contract, right? And on the futures contract, I already did that analysis on that continuous. So I'm going to drop down to the daily. As I drop down to the daily, just like that, looking at the current contract. I'm looking at this current BTC right here. Not even interested in that because we already traded down into it. And it is currently Monday. So the market doesn't open until 9:30, but in Asia is already online. So what I'm going to do now is I'm going to go from the daily. Remember, from the daily, everything below the daily time frame is intraday price action. So I'm going to come over here to my top right intraday chart. I'm going to start on the 4 hour, right? Start on the 4 hour. And you can see on the 4 hour, very high resistance. That's regular trading hours, my bad, electronic. So on the 4 hour, we recently, today so far, look, we might have missed the entry, y'all. We might have missed the entry. So far today, on the 4 hour time frame, which is intraday, what is this candle right here in the chat? What is this candle in the chat? If y'all are brand new, want to join the Discord, the link is in the chat. So if y'all want to get in the Discord, sign up for the chat. Excuse me, the link is in the chat. What is this candle right here? The rally, yes, BTC. This is a 4 hour buy side imbalance, sell side inefficiency right here, right? 4 hour BTC. So I went from the daily, I dropped down to the 4 hour. As soon as I get on the 4 hour, there goes a BTC, buy side imbalance, sell side inefficiency. You might say, hey, what about this one down here? Well, you can reference that as well. But right now, I'm mainly focused on this until we show signs of wanting to break down. If we show signs of wanting to break down and come even further, remember, I'm bullish. So as it dropped down into this, that would have been a long opportunity. And they probably going to keep pushing it higher, right? They're making these markets not interesting because they just keep driving it higher. So that's the 4 hour, right? Now, when I'm on this time frame right here, I'm going to throw up my weekly dividers. This is another concept that I taught y'all, right? These are my weekly dividers when I go intraday. So when I drop down from a daily and go intraday, I can look at the weekly dividers, and now I can look at the days of the week on lower time frames on intraday price action, right? I can look at the weeks on when I'm intraday on the 4 hour or lower. I can look at the weekly range. That's what I'm trying to say. So you can see clearly in the past 1, 2, 3, 4, 5 weeks and further, the NASDAQ has been going vertical, really not offering much opportunities. There's some opportunities in there, but the trend is bullish. That's why I keep telling y'all I'm bullish. And as I'm bullish, here we are currently, right? 4 hour time frame, BTC, buy side imbalance, sell side inefficiency. We trade down into it. And now we're just consolidating. So from the 4 hour, remember, the higher the time frame is the parent time frame. From the 4 hour, I go down to the 1 hour. On the 1 hour time frame, consolidation right now. Do you think I'm doing something right now on Sunday? Nope. When I drop down to the 1 hour, I like to look at my daily ranges, right? So I throw up these daily dividers. They're the days of the week. And now from the 4 hour, where I can see the weekly range, when I'm on the 1 hour or 15 minute, I can see the daily range. If you're not understanding what I'm showing you, you are missing the fucking point, right? It's almost like I said, it's almost like when somebody told you in 2010, hey, buy Bitcoin, and you didn't do nothing, right? This is one of those things that I'm showing you. If you're not putting this information together for free, then you just missing the point. And as people start losing their employment, as people start getting, worn out with their, whatever, they're going to wish they had something, right? Some people going to get laid off. This skill set, once you learn it, nobody can take it from you as long as you got your mental capacity with you. Nobody can take this shit from you. So as I'm laying it out right now for the people that's watching, you can go back and rewatch this and see what I'm showing you. So when I'm on the 1 hour, I'm highlighting the daily ranges, which you can just trade the daily range. For example, when I zoom in, right, you can just trade the daily range. When I zoom in, the day algorithmically starts at 12 o'clock midnight. The algorithm resets at 12 o'clock midnight. So you draw a vertical trend line in Eastern Standard Time, by the way, 12 o'clock midnight Eastern Standard Time. You draw a vertical trend line at midnight. This particular day right here, this was Thursday. That's when the algorithm reset itself. Right. And as it resets in a bullish market, right, in a bullish market condition, later on around 9:30 open, the market trades higher and then it sells off. Right. You better believe I was trading this in this sell off. Right. Now let's go down to a 15-minute. On a 15-minute time frame. If you didn't know what time frame it was, I could be showing you the monthly. I could be showing you the daily. Right. If I didn't tell you what time frame this is, it could be any time frame. But in this case, it's the 15. The 15 can look similar to the monthly. The markets are fractal and everything is going on every time frame is what I'm saying. So, for example, you got this high right here, which was Wednesday's high of last week, right? We went up. Well, let me draw it out first. That's Wednesday's high. That's buy side liquidity. Right? We opened the week, or we opened up Thursday at midnight. So when we go into midnight, we're in the Asia session, right? Asia session. So during the Asia session, price trades up, right? And it takes out the previous day's high. Remember, the market only seeks liquidity or inefficiency, right? But liquidity first. I'm always looking for liquidity. Where's the liquidity? Because I know where the orders are, right? I know that's hard to believe. How the fuck this dude know where their orders are on the market by just looking at charts? Well, I'm sitting here telling you. 15-minute, we go up, take out Wednesday's high on Thursday overnight, and then the market sells off. When the market sells off, right, look at these lows in here. You might not can see it, but you see these lows right here? Guess what's below those lows? Sell side liquidity. Right here. Right? Sell side liquidity. Now, what if I told you, right? What if I told you you can make a killing, you can make a living, and you can retire if you was to just find price movement like this? We go up, take out the previous day's high, we sell off, take out minor liquidity right there, right? What if I told you you can, replace your income doing that? So on the 15-minute time frame, 1 second, go out to the weekly, daily. Over here is the 15-minute. Yep, right here, top right, 15-minute. And then over here, bottom left, we're going to go intraday, right? We're going to look at intraday price action. So this is the 1 minute time frame. So here we are, 1 minute time frame. Again, Wednesday made the high of the week. We cross over into midnight on Tuesday. We go up, we tag, right? We tag previous day's high, right? And then we chop around, and we go up, revisit again. When it goes back up, it takes out buy side liquidity again, right? Right here on this time frame, buy side liquidity. And then after it takes out buy side liquidity, the market displaces, right? Displaces lower, right? Displacement lower. And again, this is a 1 minute time frame, just like I showed y'all on the weekly. I just showed y'all on the weekly. Go back and watch. But on this time frame right here, what profile is this? What kind of program is this that I'm showing you? And then once it hits certain levels, what is this right here? You tell me if this shit is fucking random. I don't know what to tell you. As below, so above. Right? As below, so above. I showed you this on the weekly. I showed you this on the daily. Here we are on the 1 minute time frame. I'm showing you the repeating phenomenon that y'all might not understand. That's why I'm saying you might not. I might not be the best messenger, but this is like somebody telling you buy Bitcoin, right? Back in 2010, and you just stared at it and didn't do nothing about it. Right? Don't let the opportunity pass you up again. Market maker buy model, right? Market maker buy model. Over here on the left, right? Over here on the right, market maker sell model. Just like that. So I just showed you market maker buy model, market maker sell model, right? Can you make, I don't know what else going to convince you. Also, it's looking for liquidity. Takes out liquidity, offload their shorts, sell model. You could be going long on the buy side and then turn around selling it on the short side. That's what the algorithm is doing. That's what the market makers are doing. And then look, there goes the all CNI. For the people that like to make up patterns, here goes the all CNI pattern right here. I might need to coin that one right there. I got a dollar sign. Y'all know about the juice squeezer, right? Well, goddamn it, I got the all CNI, right? Y'all know about that juice squeezer pattern. I have the all CNI pattern, right? So let me get a dollar sign so I can brand my shit, right? Let me see. Where's the dollar sign at? Right there. Right there. That's the all CNI pattern, just like that, right? Can't make this up. Can't make this up. The all CNI. All right, get your dollar bills out. Y'all might need y'all in the Discord. There you go. Right there you go. But yeah, market maker buy model, smart money offload their long, market maker sell model. AWB boss, I see the 3-headed dragon pattern. Yeah, man. But look, on the market maker sell model, right? Well, how do I enter on this? Well, from the 1 minute, you go down to the 15 second. 1 minute down to the 15 second. Excuse me. There goes the all CNI pattern. Right? Price goes up, takes out liquidity. And some of y'all might not be ready for this type of trading. But look, and let me remove, well, I'm going to keep that on there for now. But when we go up, right? When we go up, we kind of peak out right here. This is where they're doing their smart money reversal. Smart money are shorting the market right here. They drop it, right? They displace it lower. And you're getting in at the best price, right? The best entry possible known to man. You're getting in with where the institutions are. How many of y'all think y'all can do that? You're getting in with the institutions. But as it drops, right, it's shifting market structure. But when it trades back up, it's trading into this. What is this right here? Y'all tell me in the chat. What is this right here? This candle, this up close candle, right? What is that up close candle right there? Y'all tell me in the chat. What is that? What is that up close candle right there? Right? And then what about this right here? What is this right here? Can y'all tell me what this is? What is that right there? Huh? Ed, order block, BTC, AWB, bearish order block, right? You got a volume imbalance right here. Is it random? Look at the bodies. Let's zoom in a little bit. Look at the bodies, right? Trades into the opening price of the bearish order block right there. Bing. Just like that. Does it trade into the midpoint of it? Let me see. Let's lay a Fibonacci over that. Almost. It goes into it pretty nicely though. I'm measuring the order block. Okay, let's say you don't get the order block. What about the volume imbalance right here, right? What about the volume imbalance? It definitely offers you an entry. You can get in at the volume imbalance. I'm talking about at the top of the liquidity, right? What about this right here? Well, there goes a suspension gap, right? Suspension gap. We got two volume imbalances right here at the top, at the bottom, suspension gap, right? Look, and then it offers a few opportunities and it drops. When this candle right here, right? When this candle right here, when it drops and it tags the opening price of this candle right here, that order block becomes activated, right? It's activated. You got to be real quick. You got to know what you're doing, right? You got to know what you're doing. So when this candle drops and it pierces the opening price of this up close candle, and the market is in a sell program, it activates the order block. And guess what? Can you make this shit up right here? No, you can't. Look at the next candle, right? Look at the next candle. Once this candle closes, this candle right here gaps down, but it trades up, and look where it trades to. Can you make that up? Huh? Can you make that up right there? I don't know what else to tell y'all, right? I don't know what else to tell you right here. There goes enough evidence for you to understand, holy shit, right? Like I said, this is like somebody telling you to buy Bitcoin in 2010 and you didn't do shit about it. Well, here goes another opportunity for you to learn this shit, and I'm putting it on this channel for free, right? And if you want to get in the Discord, make sure y'all hit the link. It's in the chat. But look how it trades right into that, to the fucking tick. The high of this candle is 28,804.25. The opening price, 28,804.25. This wick high is the same price as this candle opening right there. Huh? This wick's high is the same price as this candle opening right there. It tags it. That's all it needs. That's all the algorithm needs to do. And when it does that right there, it sells the fuck off, right? Look, volume imbalance, right? You can get really crazy with this shit if you want to. Look, volume imbalance. They say you missed all that. Well, there goes another entry. What if you can't get that volume imbalance? Well, guess what? Suspension block right there. 2 volume imbalances. Well, guess what? They give you another entry. Bing, bing. What if you can't get that? What about this order block right here? You can get that, right? And then it drops. And as it drops, check this out. Volume imbalance plus what? SIBI. See this right here? 2 candles right there. SIBI. Volume imbalance plus SIBI. There it is. Another entry point. You can't make this shit up. Once you see it, you can't unsee it. What if you can't get that SIBI right there, right? What if you was hesitant? Well, look over to the left. You see this candle right here? Well, we traded through it, right? What is this in the chat? What do we call this in the chat? What do we call this in the chat? What if you can't get the SIBI? Well, guess what that is right there? We trade through it and then trade right back into it. What is that in the chat? That's an inversion fair value gap, right? Inversion. We trade through it and trade right back into it, right? As we trade back into it, then it drops. As it drops, guess what it trades into? SIBI. Sell side imbalance, buy side inefficiency right here. Y'all let me know if I'm going too fast for you, right? Is it getting kind of, is it getting kind of crazy or not? SIBI. Sell side imbalance, buy side inefficiency. Now look over to the left. What is it targeting, right? Old lows in the market, right? Price always seeks liquidity. Always, right? I'm always looking for where the liquidity is. Sell side liquidity right there. It's targeting liquidity. It's pulling to it like a magnet, right? It's going to draw to it. It's always going to want to reach for it. But look, how many opportunities do you see in this price move right here that you could have got in sync with? And it sells down, boom, 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 boom. Like bowling pins, takes out the liquidity, right? And then it consolidates a little bit. And then, it goes into some high resistance price action. And then it drops again, right? And when it drops again, let me show you, right? Let me show you. When it drops again, it's starting to go for liquidity, right? Let's look over to the left in this pyramid scheme. In this pyramid scheme that I'm showing you, that's in the markets all day, every day, right? You can't make this shit up. Look at these equal lows in here, right? What about these lows over here? They're gonna eventually come back and target the liquidity resting below the fucking market, because the price always seeks liquidity, right? Always seeks liquidity. I'm showing it to you right now. Let me move that $sign, right? Showing it to you right now, a complete model. So look, it eventually tax the sell side. Look, in this range over here, we're in a different phase of the algorithm moving. So in this particular range, you could take this swing high right here down to the swing low right there, right? Swing high, swing low. That's a Dylan range. You can see Dylan ranges form all day, every day, right? All day, every day. You can even take this high right here. Let me take this high right there. All right. Now we trade down, right? When we trade down, look to the left. They're taking out liquidity. They're offloading their shorts so that they can reaccumulate to go further short, right? They take out their shorts right there. Boom. Even in this right here, you might not see it, but I'm about to explain it to you yet again. Market maker sell model. You might not see it. Let me calibrate this right here. Even in this sell off lower, this is a market maker sell model, right? Market maker sell model. And then it reverses and goes into a market maker buy model, right? You can buy it back, right? You can buy it back into a premium, and you can short it at the premium and get back in sync with the market. Market maker sell model, market maker buy model goes up into what? Equilibrium, crosses over into premium. Smart money sells at premiums. When it trades into a premium, it takes out buy side liquidity, right? Buy side liquidity right here. Buy side, right? Also trading into bearish order block. See these up close candles, bearish order block at a premium. That's the key thing, premium, bearish order block. And once it does that, it goes into a market maker sell model. I don't know what else to tell y'all, bro. I don't, for free on the channel, right? For free on the channel. It goes into a market maker sell model just like that. All day, freaking every day. Pick a side, which side you want to trade. So it eventually, you're back on sync. You're getting back in sync with order flow, which is bearish, right? Order flow is bearish. You're back in sync with it. And then it eventually sells off and goes to take out the rest of the liquidity, right? Can't make that up. And there you are, right? This pyramid scheme right here, which is called the all CNI. This repeats on all time frames, every market, crypto, any market that you can talk about, right? I can do the same thing I did for the sell model. I can come over here and do for the buy model, right? All day, everyday price action. This is a 1 minute time frame. Let's zoom out. What does that look like when you zoom out, right? What does that look like? All I just showed you was a complete model inside of a tight ass consolidation, inside of a session. Right inside of a session. All this right here was just the London session from 2 o'clock in the morning to 5 o'clock in the morning. Look at all that price action that I just showed you within that small window of time, right? Within that small window of time, I showed you a complete model. We go up, take out previous day's high, and I showed you a complete system going against bullish market conditions, right? And that's what it looks like when I zoom out. Back to the 15 minute. Let's go out to the hourly. What does it look like? You can't even see it. You would see this on the hourly and be like, oh, I can't do it. There's nothing going on. But I just showed you a complete system on lower time frames. Welcome to the matrix, motherfuckers. Right? Welcome to the matrix. Nah, I'm playing. But press 1 if y'all understand. Press 1 if you are learning. Have you learned something so far? You know what I'm saying? It's getting late. I wish I didn't start this so late, but it was Mother's Day. I want to kind of continue this, but I'm going to have to get running here in a minute. But today, when I get technical, right? When I get technical, I don't, I can go for a while. So that's the technical side of this. Appreciate it, y'all. Appreciate it, Dorelli. Appreciate it, EOK. Right, appreciate it, Ed. Right, hopefully you learned from this everything. I showed y'all 3 concepts. I showed y'all many concepts for free, and all you gotta do is kind of go back and rewatch this, and you can kind of pick up on the concepts that I'm showing you. Right, I'm excited for the week. I love this shit. Right, I love the process of doing this every day. It keeps you engaged. Right, so what I just showed y'all was how you back test and how you like run. You got to learn how to back test, meaning going in your charts and seeing these things repeat over and over again, right? Right. This right here, take a screenshot of this right here. Maybe let me go to the 5 minute. Now it looks better on the 1 minute. Excuse me. No, on the 1 minute time frame, right? On the 1 minute time frame, y'all screenshot this. This right here happens on all time frames, right? This is happening on all time frames. This is a complete system, right? This is a complete system, right? When I showed y'all that 120-day range on a daily time frame, it's the same shit as the 1 minute time frame, right? This is just happening within a session. So what do I mean by that? What I want to do is, let's just say from 2 o'clock in the morning, right? Let's go from 2 o'clock a.m., which is right here, 2 a.m. to, let's say 7 a.m., right? Let's say 2 a.m. to 7. Well, let's see. 2 a.m. to 5 a.m. 2 a.m. to 5 a.m. That's considered the London session, right? That's the London session. So what I did was took 2 vertical trend lines from 2 a.m. to 5 a.m. That's what you're seeing right here. That's a complete session where it runs up, market maker buy model, sweeps the liquidity and goes into a sell model, and then it eventually extends outside the session, right? But as you can see, that's a complete system right there. Y'all screenshot that, y'all write it down, right? That's a complete system. I just give y'all a complete trading model, right? Which leads me into explaining to y'all that, hey, I got ways to beat the prop firms. If y'all want to be interested, y'all tap into the Discord to learn more, right? If you're a prop firm trader and y'all want to learn how to make that money, I got complete systems and complete models for damn near every style, for any condition, right? For any condition. In order to beat the prop firms, all you need is something like, let me show you. Let's go back down to the 15-second, right? 15-second, go out to the left. If y'all want to beat the prop firms, right? If y'all want to beat the prop firms, go out to the left. All you need to beat them is 40 points, right? 40 points. So let's just say, for example, this SIBI right here. I'm on the 15-second. And on the 15-second, I see this SIBI right here, right? So from this entry, from that entry down 40 points. 1 second. This entry down 40 points would be right there. All right, right there. That's a 40-point trade, right? 40 points. That's all you need to beat the prop firms, right? That's all you need. So if y'all want to learn that, get into the Discord, right? And it gives you an entry. Hell, you don't even need 40 points, right? You don't even need 40 points. Or if you want to trade your live capital, all you need is 40 points, right? All you need is 40 points. That's all you need. Did you get the very top of the move? No. You don't need the top of the move. You just need to get in sync with what price is doing. And once you get in sync with it, there goes your take profit right there. Liquidity, right? Old liquidity pools. Aim for liquidity. And that right there net you out 40 points. If this was a mini contract, right? If this was a mini contract, let me pull out my calculator. I'm going to let y'all go here in a second. Let me pull out my calculator. Right? So if I pull out my calculator, right? And let's walk through the minis. Let's walk through the micros. If you were trading one contract of a mini, that would be 20, right? $20 per point times 40, right? That's $800, right? That's $800. Cool, right? I think everybody can use an extra $800 a day. If that was the mini, right? Excuse me, the micro, 2 times 40. That's $80, right? So if you're prop firm trading or you doing live trading, that's all you need every day, because you can also add more contracts as well. So let's just say 20 times 5. 20 times 40, 40-point trade, $800 times 5. Well, guess what? You took an $800 trade, added 5 contracts. Now that's $4,000 for 40 points. What about if you do the micros? 2 times 40, which is $80 times 5. Well, guess what? You added 5 micros, and now that's $400 trade for 40 points. So you do the math, y'all crunch the numbers. That's all you need, right? That's all you need to kind of like, who can use an extra who can use an extra $400 a day? I'm just saying, in this economy, right? In this economy. So I'm just putting it out there for y'all, so y'all can understand. So that trade right there for 40 points, let's see how long that took you. You enter, trades lower for 40 points. $40 right here. That trade would have took you, check this out, it would have took you 9 minutes and 15 seconds, right? It would take you 9 minutes and 15 seconds to net whatever you want. It's all subjective, right? 9 minutes and 15 seconds. That's all it took, right? Minimum risk on the trade. When I say minimum, tight stop loss. Once it goes in your favor, stop loss put in profit. Minimum risk, 9 minutes and 15 seconds. $4,000, $400, right? In 9 minutes. And that's what I mean by you can replace your job, you can replace your income, because if you can do it in that time, free up your time like that, I mean, shit starts making, things you might want to reevaluate your life, or you work a job and set you up a nice little nest egg by learning this skill in trading, right? But I'm gonna leave y'all with that one, man. I know it's getting late. I got some business to handle. I definitely appreciate y'all joining. Hopefully you learned something. On this one, I went a little bit more technical. I didn't really, I asked the community, what y'all want me to talk about crypto. I'll do that on the next live stream. But this was a more technically sound video on this one, because I think it's needed, and I'm trying to lock in. So this helps me kind of lock in, right? So I can be very sharp with the upcoming conditions, right? So doing drills like that with yourself, that'll make you a better analyst, a better trader. So hopefully y'all learned something. Hopefully you picked up on some of the concepts that I gave y'all, smart money concepts. And I appreciate y'all joining. Make sure y'all hit that like button, share the video, subscribe. Also, wait. Y'all come over here if y'all want to tap into the Patreon and get mentoring, right? And I got private videos, private lessons. Y'all come over here on Patreon. The link is in my bio, all right? Y'all want to come over here and tap in with me on X. Follow me on X. I'm live now on X, right? Live now on X. Y'all hit that follow button. Or follow me at boss_trader with 2 R's. What else? Let's come over to YouTube right quick. Come over to YouTube. Go to my channel. Y'all come over here on YouTube. Y'all follow me on YouTube, right? I'm trying my best to bridge that gap, drop nothing but heat, educational, broader perspective things like macroeconomics, right? I'm dropping that heat on that. Oh shit, 1 second. But anyway, y'all follow me on YouTube, right? Follow me on YouTube. And then also, before I get up out of here, if y'all want to join the Discord, the link is in the description, right? It's in the chat. Y'all jump in the Discord if y'all want to jump in. The link is in the chat. So other than that, man, I appreciate y'all time. Definitely hit that like button. Hopefully this was of value to you, and I'll get back with y'all on the next one. Peace out. Y'all in the Discord. If y'all want to hang, I'll be in there. If not, I'll check y'all out in the morning. Peace out.